The moment many have anticipated for years may finally be upon us. Tonight, an urgent financial alert is sweeping through global investment circles, pointing to a potential massive shift for holders of the Iraqi dinar and the Vietnamese dong. This is not the usual online chatter or unverified speculation. Rather, reports indicate a genuine, imminent possibility originating from deep within international financial systems. The long-discussed revaluation process, often referred to as the RV, is being signaled for activation as soon as tomorrow. For millions who have closely followed the narrative of a global currency reset, this could mark the crucial transition from prolonged hopeful anticipation to a tangible reality. It is a development demanding immediate attention, as the potential consequences could swiftly and profoundly reshape the financial outlook for thousands of patient investors globally. The urgency surrounding this alert has financial commentators and news channels focusing intently on one primary question: could the dawn of a new day bring with it the monumental changes that have been theorized for so long? We must meticulously dissect the underlying mechanics of what a revaluation truly entails, the methods through which it is expected to be implemented, and the crucial preparatory steps that investors should consider as major banks worldwide update their electronic trading platforms. This report promises to be among the most significant updates ever shared concerning the financial status of the Iraqi dinar, given the high level of internal preparedness now being reported. The world's attention is fixed on a historic financial maneuver years in the making. Over recent months, the Central Bank of Iraq has engaged in a period of intense, yet largely quiet, modernization, laying the groundwork for what financial experts have long deemed an inevitable economic course correction. For years, the notion of a revaluation, or RV, has been a popular subject of discussion among currency enthusiasts, though the specific timeline remained elusive and unpredictable. Now, with key infrastructure reportedly finalized, including robust digital banking networks and advanced system updates, the window for this significant change appears to have opened. The close coordination observed among Iraqi financial institutions and major international monetary authorities strongly suggests that a fundamental shift in currency value is not just theoretical but is now demonstrably close to fruition. For individuals holding the Iraqi dinar and the Vietnamese dong, this rumored revaluation represents the potential for a complete transformation in the value assigned to their current holdings. The possibility that the widely discussed 3 zeros removal might become a reality as early as tomorrow is at the core of the excitement. This shift, which would dramatically elevate the international standing and value of Iraq's currency, is also expected by some analysts to initiate a ripple effect across other emerging national economies. Years of steadfast patience on the part of these investors could, according to these circulating reports, be on the verge of finally yielding a substantial result. With the decisive moment potentially only hours away, it is essential to clarify the technical process, as considerable confusion often surrounds the concept of zero removal. The term does not imply any physical alteration to the banknotes themselves. Instead, the change is implemented digitally within the secure confines of the central banking system's electronic ledger. Currently, the Iraqi dinar is traded at a very low rate on the global market, often valued at only a fraction of a US cent. However, should the revaluation process be activated, those nominal zeros are essentially shifted electronically, which has the effect of multiplying the currency's assigned value instantaneously within the digital environment. This sophisticated digital update is the true nature of the monetary recalibration being discussed. To illustrate the potential impact, consider a common banknote such as the 25,000 dinar note. Today, its exchange value hovers around $20 following a successful revaluation and subsequent rate adjustment. The same physical note could theoretically command a value in the range of tens of thousands of dollars, depending on the final rate established. This significant reassignment of value is designed to occur instantaneously once new official exchange rates are disseminated and updated throughout the global banking systems. Far from being an implausible fantasy, This method reflects how modern nations execute monetary recalibrations in the highly interconnected financial world of today. Utilizing secure digital protocols, the question of timing why now is critical. The Iraqi economy has been systematically recovering and strengthening for many years, progressively increasing its significant oil production, stabilizing international trade relationships, and expanding its modern digital banking infrastructure. Crucially, the nation's core financial institutions have been actively modernized and brought into alignment with international oversight and standards. Government sources have reportedly confirmed that internal financial systems, previously considered archaic, have undergone complete overhauls and are now fully compliant with international benchmarks. The current suppressed value of the Iraqi dinar is frequently argued by proponents not to accurately reflect the nation's true and growing economic capabilities, with vast proven oil reserves, consistently increasing export volumes, and an overall environment of rising stability. Iraq is increasingly seen as economically prepared to sustain a far stronger revalued currency. For months, discussions have reportedly been held discreetly among key financial leaders, focusing on the synchronization of this massive change with regional economic partners. The revaluation, when officially executed, is widely anticipated to fundamentally reset Iraq's financial standing on the global stage, restoring a perceived intrinsic value, enhancing market credibility, and establishing a new sense of financial equilibrium both domestically and internationally. Let us explore in greater detail the sequence of events that is expected to unfold behind the scenes. Once the revaluation is officially broadcast, every major financial institution connected to the Iraqi financial system will instantly update its exchange rate data through secure, private financial networks. The exchange rate displayed on all public interfaces, from bank teller screens to automated teller machines and online forex platforms, will abruptly reflect the new, official value. While the physical currency notes held by individuals remain the same, the global computer systems instantaneously assign them a dramatically higher, new digital value. For example, 1,000 dinars, currently worth less than $1, could conceivably soar to hundreds or even thousands of dollars in new value, demonstrating the profound capacity of a digital monetary recalibration event. Historically, numerous nations have undertaken similar processes to transition from periods of currency devaluation toward greater stability. What makes this particular event distinct is its direction, a substantial upward revaluation on such a large scale, which is an extremely rare occurrence in the modern financial era. Furthermore, the persistent confusion surrounding the term three zeros removal requires simplification. If a currency is currently valued at, for instance, $0.00085, removing 3 zeros is the digital equivalent of moving the decimal point 3 places to the right, resulting in a new hypothetical value of 85 cents. This change represents a 1,000-fold increase in the currency's digital value following this calculation. If an investor holds 1,000 dinars today, currently valued at approximately 85 cents, post-RV those same 1,000 dinars could potentially be worth $850 based on that new rate. Should the exchange rate climb even higher, perhaps to a value of $1.20 per dinar, as some enthusiastic analysts have forecasted, the holdings would appreciate even more significantly. This transformative change does not necessitate the printing of new money. Rather, it is about reassigning a new digital valuation based on a new, officially established baseline rate. This methodology is consistent with the fundamental principles governments utilize when attempting to stabilize hyperinflation or correct long-standing exchange rate imbalances, with the critical difference being that this instance represents a massive, positive valuation shift. Our attention must also turn to Vietnam, as the Vietnamese dong has long been linked to the dinar narrative and is considered another significantly undervalued currency with strong revaluation potential. Vietnam's economy has demonstrated robust, consistent growth driven by expansion in manufacturing, international trade, and exports year over year. Similar to the situation in Iraq, many financial observers argue that Vietnam's current low currency rate does not accurately reflect its remarkable real-world economic progress and burgeoning strength. The widely anticipated revaluation process for the dong is largely expected to utilize a system mirroring that of Iraq's. Once the official trigger for the dong's revaluation occurs, the new, updated rate is anticipated to appear instantaneously across global financial platforms. For those investors holding both currencies, this potential synchronization could materialize as a significant dual opportunity. While many experts predict that the dong's ultimate increase in value may not match the dramatic scale expected for the dinar, it is still projected to deliver substantial gains. Collectively, these simultaneous potential reevaluations could usher in a new era for investors, closely monitoring the markets across Asia and the Middle East, marking a significant recalibration of emerging economies. A common and valid concern revolves around the readiness of global financial institutions for an event of this magnitude. However, the evidence suggests a high degree of preparation. Numerous international banks have, in recent months, been observed updating and overhauling their sophisticated digital exchange systems, quietly preparing the necessary infrastructure for these specific rate adjustments. Furthermore, reports have surfaced detailing specialized staff training sessions and successful system synchronization tests that have already been conducted. These large-scale updates are not random occurrences. They are integral components of structured, complex financial rollout plans. When the reported activation commences, banking platforms are fully expected to adjust automatically and seamlessly to the new exchange parameters. For the investor community, this is a crucial detail. The revaluation process is not expected to involve any requirement for special access codes, obscure secret banks, or hidden portals. Instead, the process is designed to operate through standard, well-established financial channels, functioning exactly like any other routine currency exchange transaction processed by banks worldwide. The focus remains on standardizing the process for maximum efficiency and security. As the rumored activation time approaches, investors must clearly understand the expected sequence of events. First, the official announcement of the new rates is likely to be disseminated through formal government statements, official banking bulletins, or instantaneous digital updates across major forex trading systems. The complete transition could be immediate, or it may be rolled out in carefully managed phases, dependent on the level of technical coordination required between Iraq's central bank and the international clearing systems. There may be a brief period of initial confusion as some less agile platforms take longer to refresh their data. However, once the new official rate is established and stabilized, investors will be able to proceed to their banks or authorized currency exchange centers to convert their holdings at the newly assigned value. The importance of maintaining composure and patience during this period cannot be overstated. The initial days could be marked by unusually long service lines, potential system delays due to high traffic, or perhaps temporary limits placed on high-value exchanges. Experience shows that whenever a significant financial event unfolds, a corresponding wave of misinformation quickly follows. Therefore, extreme caution is mandatory. Investors are strongly advised to disregard all unofficial exchange offers or private deals that promise unrealistically higher rates. Only major banks and authorized institutions, regulated and sanctioned by central monetary authorities, are legally permitted to process official revaluation exchanges. Scammers are likely to exploit the initial period of confusion, attempting to take advantage of excited investors. Remaining vigilant and verifying all information directly with one's own established bank is the most critical safeguard. It is also important to remember that banks may impose standard daily limits on exchanges or require pre-scheduled appointments for very large transactions. Investors should not panic if they are unable to exchange their entire holdings on the first day. Historically, the redemption window for such events remains open for a period of several months, allowing ample time for processing. The ultimate key to navigating this period successfully will be a combination of patience, meticulous record keeping, and the ability to make calm, rational decisions throughout the process. Avoiding emotional reactions, one frequently overlooked but vital aspect is the issue of taxation. Currency gains resulting from a revaluation are typically considered taxable income in most jurisdictions. Therefore, if the dinar or dong was purchased many years ago, investors must ensure they have comprehensive proof of their original purchase, including receipts, invoices, or detailed transaction records. These essential documents are necessary for accurately determining the taxable profit when the exchange is finally made. Consulting with a licensed tax advisor either immediately, before or after the revaluation event is a crucial step to ensure effective financial and tax planning. Governments worldwide possess sophisticated systems for monitoring large currency exchanges, making transparency an absolute necessity. Investors should not allow confusion or lack of preparation regarding taxation to diminish what could be a life-changing financial outcome. Proactive planning is the only way to ensure that a maximum portion of the well-earned gains is ultimately retained. Even after the official announcement, investors should not expect to simply walk into a bank and walk out instantly with millions. Large-scale transactions demand a multi-step process involving verification, system approvals, and in some cases, direct coordination with the central bank itself. High-value exchanges may be methodically scheduled over a period of several days or even weeks. This is a standard operating procedure, not a tactic designed to cause delays, and it serves as a critical protection measure for both the banks and the investor. Smaller, more routine exchanges may process more quickly, but even these are likely to involve longer than usual wait times as bank staff and systems adapt to the completely new parameters. This phase is analogous to a major global software update. It requires time to properly synchronize across all interconnected financial networks. Patience will, once again, prove to be the most invaluable asset for any investor. The conversation now shifts to addressing the central question: what justifies such a high potential rate? Iraq is the custodian of some of the planet's largest proven oil reserves. This immense untapped natural wealth provides the nation with a formidable degree of economic leverage and intrinsic value. When this resource is combined with Iraq's recent successful fiscal reforms and its strategic regional trade partnerships, the argument for a sharp rise in the dinar's true value gains substantial weight. Proponents argue that a revaluation stabilizing around 85 cents to $1 per dinar is not unrealistic when measured against robust oil-backed GDP growth projections. The nation's ongoing modernization efforts, coupled with increasing political stabilization and a rising influx of foreign investment, create what many perceive as the optimal environment for this currency realignment. At this point, the discussion is less about pure speculation and more about economic mathematics catching up with a verifiable, real-world value proposition. Historical data demonstrates that currency reevaluations frequently occur during periods of intense economic rebuilding. Following major conflicts, recessions, or significant political transitions, nations often utilize currency resets as a fundamental tool to stabilize a currency's value and actively attract critical foreign investment. What sets this current situation apart is the unprecedented global attention now focused on both the Iraqi and Vietnamese currencies. Social media and the internet have transformed what were historically quiet internal financial adjustments into massive global events. However, the core mechanism, value correction, remains fundamentally the same. The difference in this case is the direction of the adjustment rather than losing value. As is common in many historical resets, holders of these specific currencies stand to experience a significant gain. This reversal of the more common historical trend makes this moment not only a matter of historical record but potentially life-changing for numerous smaller investors worldwide. Naturally, not every observer is convinced that this revaluation will occur as dramatically as predicted. Skeptics often contend that value adjustments of this magnitude are simply impossible, dismissing the entire narrative as mere internet hype and wishful thinking. Yet economic history provides numerous counterexamples. Dozens of nations have successfully adjusted their currency values after implementing profound infrastructure and financial reforms. What many skeptics overlook is the fact that both Iraq and Vietnam have been methodically preparing for this potential shift for more than a decade. The timing, which was previously deemed unsuitable, now appears to be perfectly aligned. In this current financial landscape with unified digital banking systems, surging oil production figures, and geopolitical stability improving, all the necessary conditions are reportedly converging. The same level of doubt and skepticism was cast upon the launch of the euro. Major change is always met with resistance until it is undeniably realized. Tomorrow could potentially be the day that permanently silences the skepticism surrounding the dinar and dong for those who currently hold the dinar or dong. A practical preparation checklist is essential. Begin by organizing all currency notes by their denomination and carefully assessing their condition. Notes that are significantly damaged or deemed unrateable may be subject to additional verification procedures. Investors should identify which banks in their local area are authorized to handle foreign currency exchanges and confirm if they will process revalued notes. Ensure that all government identification, including a valid passport, government ID, or driver's license, is readily accessible. It is important to remember that any large financial transaction is subject to mandatory ID verification under international law. Securely store the currency and avoid carrying large amounts of cash unnecessarily. When transporting holdings, exercise extreme caution and consider using documentation that proves the currency's authenticity and origin. Above all else, maintain constant vigilance and rely only on verifiable, reliable updates from trusted sources for step-by-step developments for those who have committed years, and in some cases, a decade or more to this investment. This moment is more than just a financial transaction. It is the ultimate test of faith, patience, and impeccable timing. They have endured countless, unverified rumors, frustrating delays, and endless speculation. Yet the persistent signal of the RV activation suggests that this patience is now on the verge of being rewarded. The opportunity to witness such a significant financial shift, where years of patient waiting may translate into substantial prosperity, is a truly rare event. It is vital to remember that true wealth extends far beyond mere numerical value. It ultimately represents the freedom to make meaningful life choices. If this revaluation does materialize as predicted, the gains should be managed wisely. Planning for the future, ensuring the security of loved ones, and investing in opportunities that foster long-term stability and security are the most prudent courses of action. And so we find ourselves at the culmination, the final hours before a potential revaluation event. The global financial community is watching with anticipation. Whether tomorrow brings the full dramatic revaluation or merely the first confirmed step toward its completion, one fact remains clear. The comprehensive groundwork and infrastructure for this massive change have been meticulously constructed. The advice remains simple: stay calm, maintain the highest level of alertness, and ensure all information is thoroughly verified from credible sources. This could indeed be the watershed moment that dinar and dong holders have long been anticipating.